Alrighty, so welcome everybody and thank you for joining our webinar with Tommy and Zach from Prime. Really excited to be here today because this is a question we get asked all the time. How do I set up my structure? What do I need to consider with taxes? How do we use trusts? All of that stuff. So before we jump in, I just want to introduce Tommy. And Tommy, I've got your bio here, so thank you for sharing that with me. So guys, here's a little bit about Tommy. So Tommy Thornburg, do I pronounce it Thornburg, Tommy?
Thornburg, you got it. Good
Beautiful.
work.
President of Prime Corporate Services, was born and raised in the world of entrepreneurship. He grew up with two self-employed parents and started his own self-employment journey at just 18. He's now more than 15 years of industry experience as a business building strategy. And Tommy is an incredibly accomplished and highly sought after business advisor. His team has helped more than 150,000 entrepreneurs structure their business, minimize their tax burden, and maximize their profitability. Wow, Tommy, that's a big number. Over the last 12 years, Prime and its subsidiaries have grown to more than 300 employees. Tommy takes pride in the lighthearted, work hard, play hard company culture he and his business partners have cultivated. Despite his president role at Prime taking up the majority of his time, Tommy remains connected to his self-employment roots. He maintains entrepreneurial ventures in a diverse set of industries, including real estate, stocks, and more. And through all of this, he's sure to carve out space for his personal pursuits. Whilst when he's not spending time with his wife and two daughters, you can find him chasing a birdie on the golf course or perfecting his serve on the pickleball court. Tommy, next time I see you, maybe you can help me understand the world of pickleball because it seems to be a craze that's taking over.
It is taken off. It's so fun. Once you get the itch and once you play a little bit, it's amazing how it's like ping pong more than it is tennis. And it's just
Yeah,
easy to find people to play with and it's good
love
workout.
it.
It's been fun.
Love
I've
it.
really enjoyed it.
Well, I'm certainly excited to have you here today, and we've got a small group of people, but we're going to certainly broadcast this out to the many. So let's jump in. Tell us all the different things, and I know you've got a presentation to take us through on how we all need to think about structuring taxes, trusts, entities, all of the good stuff, Tommy.
Yep. Thank you so much. I'm excited to be here. Thank you everyone for being here. Let's keep it like we were talking about. Let's lighthearted, easy going here. Ask questions. I'm happy to answer as many as possible. Just a little bit additional on the bio here. So my parents got divorced when I was 3, and I share this all the time because I can't believe they were together for 3 years. It was probably the worst 3 years of their life. The only thing that they ever agreed on was that they wanted my sister and I to be self-employed. And for that, I am forever grateful. I love talking to real estate investors. About 40% of our clients are real estate investors, a little less than half. It is so easy to find deductions when it comes to real estate. So it makes my life a whole lot easier when I get to talk to you about entity structure and tax savings. And when we started Prime in 2012, the goal was to help startup entrepreneurs just getting going with legal, financial, the boring stuff, if you will, that we all know is overly important to the bottom line of your business. So entity structure, business credit development, tax planning, tax prep, bookkeeping, and then also estate planning, trust wills, living wills, power of attorneys. That's what we really specialize in and focus on. So I'm going to share my screen. I'll go through some of the slides. Feel free. I mean, Alicia, I don't know if there's anything that you want to add as we go through it, but
Yeah,
feel
as
free.
you're going, Tommy, I'll probably have some questions. And by all means, folks in here, if you've got questions, pop them in the chat as we go. And I'll keep an eye on the chat, and I can obviously interject and ask questions as we go as well, Tommy. We'll keep it nice and informal.
Awesome. Love that. Thank you for that. So these are really our two mottos that we try and ultimately live by for the whole organization. We currently have over 300 total employees between the accounting firm and between the advisors and the attorneys. And plan, profit, protect your business is our mission to help our clients. And what I will share with you is from a tax standpoint, one of the biggest mistakes that we see our clients make is the lack of proactive versus reactive. So what I mean by that is break up your year into months or at the very least quarters. January, February, March, quarter one, so on and so forth. Going into the fourth quarter, I love that we're talking right now because there's still time to plan for these things if you aren't overly organized or if you don't know what the true profit and loss looks like. Because if you have a W-2 job, or if you're full-time self-employed or a full-time real estate investor, if you know what the profit is and you know the expenses that have been put out for your business, it will give you a very simple number to tell you what you're going to end up paying in taxes at the end of the year. Unfortunately, the tax code is use it or lose it, right? But the good news is, as an entrepreneur, as an investor, you get to go generate revenues, invest back into the business, and then pay taxes on what's left. So if you knew right now that you're on pace to pay $10, $20, $30, $50,000 in taxes, whatever that is, does it make sense to purchase a property, accelerate the depreciation, and give yourself more cash flow? Does it make sense to up the marketing spend, to invest into yourself? Everyone spent money to be a part of the community. Let's make sure that that's a deductible expense. So being proactive as opposed to reactive is one of the biggest takeaways that you'll have as I go through these slides.
I love that, Tommy. If I can interject with a super quick story. We
Please.
had a customer about 2 years ago that called me, and I'm not kidding when I say this, literally called me on New Year's Eve and said, AJ, I need to spend $30,000 on marketing before the end of the year. Can you send me an invoice right away? So, it's never too late, right?
I currently own 78 doors of real estate, and like 64 of them, I had my accountant go through and double check. By the way, my accountant's name is Annette, and I love Annette. So Annette, good to see that name here, let alone you. But all the properties that I purchase are usually in November and December. And if historically you look at the amount of transactions that happen on a monthly basis, usually most years, November and December have the highest transaction rate. And it's because people with wealth, people with money, people that are planning know how much they need to be able to purchase, to depreciate, to create additional cash flow.
Yeah.
And I love where we are in the year because you give yourself the ability to do that coming up here shortly. So
love it.
I'm going to share a story. Same thing, 30,000. So I had a really good buddy of mine. I live in Salt Lake City, Utah, and he called me on December 30th. It was 2 years ago. It was a Saturday. And he's like, I need money for another investment. I know you're always looking for deductions. He said, if you want to give me $100,000, I'll give you 33% of this fourplex. That's about 10, 20 minutes from my house. Okay, cool. Call the accountant, 100,000, saves me $70,000 in taxes with a cost seg. Done. Let's do it. It was a terrible investment. I have never seen a dollar back. It is a good friend. I give him a hard time about it all the time, but the ability to make that decision, knowing that it saved the amount of money in taxes, makes it feel, for whatever reason, a little bit better. And being self-employed, that just is what it is. You're going to have wins, you're going to have losses, but if we can mitigate those losses through deductions, it's going to really help grow, scale, and make better decisions for you as a business owner. So, number one, let's talk about entities. YouTube University will make your head spin with all the different thoughts and opinions and how you should structure your business. I will be the first to tell you it is not one size fits all. There's pros and cons. And if you understand what those pros and cons are of where you're going with your business and where you are currently, it makes it a whole lot easier to make decisions that are going to benefit your future. Number two, tax deductions, how they work, what to be aware of. Whether you are a real estate professional or a self-employed, home-based real estate investor, there are still deductions. We just need to make sure that we know what you qualify for to maximize on the deductions available to you. Number three, asset protection and generational wealth. I would assume based off of real estate, land, all these other areas that are being pursued currently within the group. There will probably be a lot of questions around trust and wills, and we'll go into that from an asset protection standpoint. And number 4, personal credit versus business credit. Never met an entrepreneur that says, I wish I had less money. And I think that's important to start with, because the more money that you make, the more funding opportunities that you create for yourself, the easier it is to generate more revenue, help more people, but ultimately just give you the ability to make decisions with lower interest rates as well. So we'll talk a little bit about how to build and how to develop business credit, corporate funding. I think to hear your story about the $30,000 at the end of the year, if you can invest into marketing and into your business, utilizing business credit, let the business pay for itself, and then pay yourself from there, you're not only going to keep yourself more organized from a tax standpoint, you're going to separate your liability. And my message about really understanding what your profit and loss is a whole lot easier to obtain throughout the course of the year as well. So anything you want to add there? Anything else that is you think is important for me to cover with these?
Awesome, Tommy. Let's jump into those, because we do have a hard stop on the hour. So we'll jump on in. I'm excited to hear what you've got to say.
Before we do, everyone's favorite part, legal disclaimer. Fun fact, if you read every legal disclaimer that was presented before you over the course of a year, it would actually take you a year to read it. Isn't that scary? 2 things on this legal disclaimer. First of all, everyone's situation's different. Some of you are married, have kids, multiple businesses. Second part, I'm not a CPA or an attorney, but they do all the work. I've got a full team. We've got 80 accountants. We've got a full team of attorneys. They do all the work. I like giving these presentations, and I also really want to talk to you as an entrepreneur and as a business owner. Some of you may have experienced this. You ask 10 attorneys one question, you get 15 different it depends or different answers. Attorneys are going to lean towards protecting your assets. Accountants are usually going to lean towards the path of least resistance to file your tax return. Knowing that is very important for your business journey, because the truth is oftentimes somewhere in the middle for you as a business owner. So hopefully these slides and this presentation will give you those takeaways of what questions to ask attorneys, CPAs, yourself on what is best for you and why. Okay. Now, when it comes to business structure, one of the most common questions that we get from real estate investors specifically, how many properties should I put in one LLC? Should I have a different land trust for every land deal that I come across? This is a very, very commonly asked question that we get. What I will share with you is there's no right answer. And the 3 things that I'll tell you that you should be aware of whenever you're setting up a business entity, number 1 is privacy and protection. How much privacy do you want? I don't want my address or my name listed on state websites. That way I give myself a little bit of additional anonymity and privacy. Number 2 is tax benefits, profit or loss, good or bad, profit or loss. How can you put yourself in the best position possible? And number 3 would be credibility. Show yourself as a legitimate business to clientele and also to banks and lenders, but separate out the assets that you're obtaining as well. So we've all heard we don't want to put all of our eggs in one basket, right? Common saying thrown around very loosely. The problem with that statement is no one told us what eggs to put in what baskets, right? So with that being said, I have some clients that are very, very conservative in the sense that they will do a different LLC for every single property. I have other partners and clients that we work with that will put 30, 40, 50 doors per LLC. The major difference is the risk tolerance and the portfolio size. I feel that it's very important to make sure you're properly insured in a worst case scenario. But as you get more properties and more assets, it's really hard to separate them out into different entities, because then you're paying more money for annual fees and for annual taxes than ever before, right? So make sure you ask yourself those questions. You're aware of the equity, you're aware of the risk tolerance, you're properly insured. And I think that's what I'm excited about with this relationship is we're here for you, and you have someone that you can reach out to if you have these questions. If you can focus on generating income and relieve yourself from the concerns of asset protection and tax savings, it should put you in a much better spot.
Yeah. Hey, Tommy, we often get asked an interesting question for those in vacant land as well, because a lot of people are doing deals that is different to the state that they live in. And the common question I get is, do I need an LLC in every state that I'm doing a deal?
The short answer is no. The longer answer is, if you're going to be buying several properties, several land deals out of Arizona, let's say for sake of conversation, it is a good idea because you're going to run into less roadblocks. And what I mean by that is, I'll share a personal example with you here. My cousin lives in Missouri, and I've been buying a bunch of properties in Missouri, and he's been property managing them. And I live in Utah. I've never even been to Missouri, but I do have a Missouri LLC that I put all of those Missouri properties in. And the main reason that I do that is because it's a small town and there's two lenders. And when I tell them that I want to purchase out of an LLC, I swear to you, they about fall out of their chair every single time. And if it was an LLC that was from a different state, I don't even know if they'd know how to comprehend or do it. So there are different state laws. There are different banking regulations. If you're doing a one-off deal and you're wholesaling land, or if it's a deal that comes across your desk that you don't do a lot of business in that state, I would say no. Yeah. And I'll talk to you about how you can structure those deals. But if you're going to be doing a lot of business in one particular state, it is a good idea in most cases just to avoid the headache with lenders and banks.
Yeah.
So you agree there? Anything you would add to that? Or
I'm good with that, Tommy. Yeah, good answer.
Yeah, if you were doing different LLCs for every state, and a lot of times you're sending marketing and isolating to a specific area. So being protected in those areas is great.
Yeah.
Now, there's over 70,000 pages of the tax code. And in the heart of the political season that we're in currently, whether you're Republican or Democrat, speaking entrepreneur is much more important in my eyes. I promise I didn't come here to get political on you. But there are a lot of deductions for investors, for entrepreneurs, for real estate investors specifically. So if anyone here is just getting started or hasn't done their first deal, it is still very valuable having an LLC from the very beginning. Limited liability companies are simple, they are easy, they give you flexibility. And if you are looking at more long-term buy and hold type properties, then LLCs will give you that asset protection, right? If you're doing more contract work, wholesale work, flipping land, you're generating active income. So what we need to do is make sure that you identify and are very aware, are you generating active income or passive income? Active income is wholesaling, fix and flips, anything that you're exchanging time for money that is less than 12 months is usually going to qualify as active income. Passive income would be long-term buy and holds, right? I share that with you because once you have an LLC, write off your startup expenses, write off your organizational expenses, write off the cost of the advisory and the community expense and the marketing expense. Because if you don't, and you take these things to an accountant, they'll say, well, education only is $3,000 a year. And well, there's no money that's being generated, right? That's another thing that we hear all the time. Our accountant said, wait till we're making money. You can still take deductions before you show a profit, right? There's no tax code that says you have to be good at business. No one would be in business. It's hard. But there is a tax code that says as soon as you have the intent, you can take business related deductions. So you have the intent, set it up the right way. For active income, you can change the LLC so that it is taxed as an S corporation. And anyone watching this, if you're generating active income and you're still operating under an LLC, let's review that, because we can still change the S corp election and you can get the credit for the entire year. What that does is it allows you to pay yourself a salary or a distribution. And it also allows you to avoid half of your self-employment tax, which is Medicare, Social Security. So it saves you about 7%. You make $100,000 of active income, you'll find a better place for $7,000 than Uncle Sam's pocket. I'm confident in that, right? Anything you want to add there? Do you agree with all that? There's kind of mixed thoughts on like, set the LLC up when you're ready and when you're comfortable. And I do agree with that. You have to be comfortable with all the decisions you're making with your business. But logically speaking, there's tax benefits and you can start building business credit from the very beginning, even if you're not generating income.
No, I love that, Tommy. And especially what I love about what you've said is that, every business has startup costs, every business. And I think if we can all take that mindset around, there we go, all of these things that I need to get my business started, they're not necessarily a cost, even though they're an expense, but they're an expense that I can write off and I can keep writing those off, as I keep growing my business. So, it is normal for a lot of businesses to start in the negative, and that's not necessarily a bad thing.
Yes, 100%. Yeah, there's a statistic that says 80% of businesses do fail in the first 2 years. And a lot of it is due to lack of capital. We can thank restaurants specifically with having so much overhead and such low margin for not usually turning a profit in the first couple of years. But when it comes to tax deduction, so back in the 1970s, there was a group of accountants that got together, went to the IRS, and they said, listen, the tax code is getting out of hand. Help us, help you, help our clients with what is or is not deductible, what is or is not a business-related expense. So the IRS gets together, 70,000 plus page tax code, and they come back with 2 words, ordinary or necessary. So if you can say that you spent $1 and it's ordinary or necessary for your business, then it can be a deductible expense. So the accountants were like, thanks for nothing. That was not very helpful. Can you give us a little bit more guidance? So they came back with 2 more words, helpful and appropriate. So we've got ordinary, necessary, helpful, and appropriate. And I wish I knew those words long before I did. If you're taking notes, please write those ones down. Ordinary, necessary, helpful, appropriate for you to generate income. Business lunches are not necessary, but they're ordinary and they can be helpful and appropriate for me to generate income and build relationships into the future, right? Having a vehicle, your phone, your internet, your power. I like the way that you explained it, where we think about them as bills, but if they're business-related expenses, everything's 30% off as a business owner, right? Your phones, your iPads, your cameras. How can you connect and tie things back together with your business? The more that you can do that, the easier it is to be able to maximize on these additional deductions. And then 2 quick strategies that I'll share with you. More money, more problems, but they are good problems to have. And we're going to welcome them with open arms. Whether it's investing more money into marketing in the 4th quarter, like the example you shared, I love that. I think it's perfect. What can you do to spend dollars that will benefit your future to keep more money in your corner? Any of you have kids? I've got 2 little girls. I've got a 3.5-year-old and a 10-month-old, and they are models. They look like their mother. Lucky for them. And I pay both of them $14,500 each. It doesn't have to be the whole amount. It can be $1,000, $5,000, whatever. We have some clients that make a lot of money that'll pay them $50,000, file a tax return, and it's a lower tax bracket than what they would have paid on it because they're in the highest tax brackets. So we can play with these things, but what I really love about this is no one taught me these things growing up, right? You graduate high school and you know algebra, waiting for algebra to come across my desk. I've been ready for years. It hasn't happened. But interest rates, taxes, what can you do to make this generational for friends, family, loved ones? If I can pay my girls and put the contributions into an IRA and then have them either pay for their dance or pay for their sports or pay for their school, or we go to a store and they're like, I want this. Okay, cool. You have money. Go buy it. But once that money's out, it's out, right? I get the deduction as a business owner. They don't have to pay taxes on that money because they didn't make enough money. So they have to be doing something for you. It has to be strategy for the business. It has to be reasonable work. Like I said, I have on rental properties pictures of my kids that are showing this real happy family Instagram type lifestyle, right?
We've got customers as well, Tommy, that have photos of their kids on their website because they're models working for the business. So yeah, there's ways to get around it, right?
Yeah, social media management, cleaning the office space, helping with mailers. There's a lot of really cool things you can do. Has anyone heard of the Augusta rule, or has anyone implemented this into their tax strategies? The last one, obviously, you need kids to be able to take it. This is one that everyone can benefit from. Once again, back 1970s, gentleman that lived in Augusta, Georgia. For any golf fans, that's where the Masters golf tournament is every year. A gentleman got audited for renting out his house and not claiming the income. So based off of connections and knowing people in high places, how this law got passed, I have no idea. But the tax code is filled with things like this. It's section 280A of the tax code. And what it says is you can rent your house out up to 14 days a year tax-free. So it doesn't mean you have to go put your house on Airbnb. How I utilize this strategy in my business. On the 5th of every month, my business rents out my house. I have an agreement. I transfer the money. Everything has to be legitimate. We got to play by the rules, right? We're not trying to raise red flags. But I go over my minutes, my meetings, my bookkeeping, my monthly goals, my quarterly goals. I track who it's with. And for a lot of our clients that implement this one strategy, it's $10,000 to $20,000 in savings, just like that. Okay, you're doing this anyway. Wow. You're strategizing anyway. You just haven't formalized it and put it on paper. And we can help you do all these things so that you're not just spending money on things that you feel like are unnecessary. Things that you're going to do anyways. This is a huge lift, massive benefit here.
That's fantastic, Tommy. You're just formalizing it through some paperwork, right? I mean, how amazing.
Yep. Same thing with the kids.
What you can charge rent-wise?
Yes. So there's a really cool website. I'll put it in the chat for everyone. It's called peerspace.com, and it'll tell you what the average rental could be. A lot of times we base it off about $1,700 a night, but depending on the area that you're in, it has to be reasonable for something that's close. I based mine off of a Marriott courtroom, conference room that's close to my house. And think about it that way. I could either rent out a Marriott conference room for the day for that offsite meeting, or I could rent out my house, right? So think about it that way. And we do want to make sure that we get an average. If the nightly rental is $500 a night in your area, we can't charge $5,000. We're going to raise those red flags. So we got to make sure we're doing it the right way, but it's usually within reason of your area. Cool. Asset protection is important. We can maybe do another session where we bring the attorney on here and scare everyone half to death, but my attorney would spend 45 minutes on these slides. I'm going to spend like 45 seconds. It's a sue happy world that we're living in. We're probably not going to argue there. The more successful you become, the larger the target on your back becomes. That is just reality, right? And a lot of times being in the real estate world, tenants think that you have more money than you know what to do with. Having the privacy and the protection is obviously important. Making sure that contracts are reviewed is obviously important. But I had the opportunity to speak with a billionaire a couple years ago, and he said, my favorite attorney that kept things simple for me said, let's just set your business up with the thought in mind of it's not if you get sued, but when you get sued. And I love that saying because if you have a solid foundation, if you were in a lawsuit right now, there's a lot of times where the shoulda, coulda, wouldas start to come up. I was in my first lawsuit. I was 22 years old. It was the first investment property I ever purchased. And we agreed on a $400,000 purchase price. And he wanted $500,000 2 years later because of appreciation and how long it took him to build it. Me being naive, friend, contractor, trusted him, didn't have the proper contracts in place. Fortunately, I own the land. So we put a lien on the house, ended up working out all right. Wouldn't recommend it to anybody. It was a nightmare still. So give yourself that asset protection, separate out those liabilities. And the more that you know about your situation, the easier it is to be able to pull those strings. Okay. Last couple slides here, and then I want to make sure we leave time for additional questions that anyone may have. But personal credit versus business credit. You work very hard to create this personal identity, right? You have a legal name, a social security number, or an ITIN, and a personal FICO credit score that ranges from 300 to 850. One of the areas that we focus on in building business credit, we are currently getting over $4 million a month in business credit and corporate funding for our clients. And we want to make sure that you have a business name, an EIN, employer identification number. Please set up a separate bank account so that you're not commingling funds. And then you can build and develop a Paydex profile for your business as well. It's a credit score for your business. It ranges from 1 to 100, and 80 to 85 on that scale would be like you having a 750 to an 800 credit score. Okay. I've been building my business credit for about 8 years now. If 8 years ago you told me there would be a benefit for me to purchase property in Missouri using business credit, I would have called you crazy. I share that with you because I don't know what you'll use business credit for. It might be marketing. It might be ads. But I have a hard time thinking 5 years from now, you're going to call me and say, Tommy, I wish I never built business credit. Having these additional funding options has been terrible, right? 8.5 acres and 2 mobile homes in Missouri. It was $150,000. I would have been looking at about 8%. And I had an open line of credit at 4%. So I used a business line of credit at 4% to save myself those points. I can still always refinance when it's favorable, but that way I saved myself the 4 points just by having the additional funding opportunities. So I recommend everyone build a credit profile. It's broken up kind of into 3 tiers. Tier 1 are what we call starter accounts. We also internally call them accounts that nobody really wants. It's like Uline, Granger, Office Garner, things that you don't really want. But you can still buy toilet paper, paper towels, things like that from these websites, where if you do that for a couple of months, you build up a payment history where you can now get major credit cards. If you go to a bank today without establishing these things and you say, I want a business credit card, they'll be like, okay, great. What's the name of your business? What are you doing? What's your social? It's a personal credit extension. They may put the business name on the card, but it's still tying back to your personal credit. And I share that with you for you to just be aware of it so that you don't feel like you're building this credit profile, but haven't established these areas of your business. I'll talk to people that are like, Tommy, I've been in business for 20 years. What do you mean I don't have a Paydex score? The difference between personal and business credit is personal credit, they start judging you right off the bat. Student loan, car loan, credit card, you're getting judged credit-wise. Business credit is similar. It's not rocket science. However, you have to apply for it. You have to build it. You have to maintain it. A little bit more maintenance. There's a statistic out there on 80,000hours.org. It's a really cool website that basically shares you have 80,000 working hours for the average person. And statistically, people that are self-employed make more money than people that are employed. And I share that with you because banks are businesses and they know that. So all of my business lines of credit are about double what my personal lines of credit are. And the interest rates are usually less. So there is value in the credit line and the interest rates as well when it comes to building up those credit profiles. So anything you want to add there, or are these things that
this
you've
is
had
great,
clients
Tommy.
do? Good.
Yeah, we've also got two business credit partners that we leverage because, I think the important thing to recognize in real estate, a lot of people get taught the phrase OPM, right? Other people's money, but they think about that in terms of a property. They don't necessarily think about it in terms of their business. So yeah, I love using business credit, and we've got a lot of happy customers that use business credit to pay for marketing, VAs, equipment, the scalability of their business, all things like that. So it's great.
Perfect.
I have
Yeah,
a
I love
quick-
that.
Just a
Go ahead.
quick, question, Tommy, this is Kathy in Georgia. I have been building it and I did the same thing that you suggested, the U line and the major credit cards. And then I have my American Express and some business credit lines in my local bank as well. But what I found recently is I could not find how to check my Paydex score or learn what it was rated. I had put some things in the American Express side and was wondering why my personal bureau had not reflected it. That's when I realized it was on the business side of it. And I built, my vehicles are in that, but I've never been able to find the actual rating.
Yes, thank you for this. This is very common. So if you nav.com, nav.com, they've been great for a long time. They are losing their appeal a little bit. And the reason for it is they're in a big negotiation right now with Dun & Bradstreet. We had Dun & Bradstreet actually reach out to us because we've put so many people through the business credit builder. They reached out to us to ask how we were doing it as efficiently as we were. And we ended up talking to the entire ownership of D&B. And nav.com, if you pay for the monthly on there, I think it's like $30 a month. I would recommend that you pay for it and keep it for 3 months because it will actually report to your credit profile for the time being, and it'll tell you what your credit report is. But things are constantly changing. And one of the examples of something changing, American Express is not reporting back to the credit profile. So you've built it up, and that's a really good example of American Express told you it's a business line of credit, but it's still personally signed and guaranteed to you because they're not reporting back to those bureaus. And that
When
is
I
something
questioned her, when I questioned her, she said, "Oh, well, you need to contact Dun & Bradstreet. We don't have anything to do with that." And I thought, yeah, you told me I was building when I did it. That's why I did it. Because I've had American Express since 1983 myself personally. And so, but Truist is, the bank is reporting, but I can't
Yes.
see it. So I don't know.
Yeah, there's a lot of great ones. I think we currently have like 200 different ones that do report. So a
But
couple of
now-
that, they are constantly changing as well. Like Bank of America, if anyone has a Bank of America near them and you build up that Paydex profile and you have an 80 to an 85, or Key Bank, I'm sorry, it's Key Bank right now, but you have to walk into Key Bank and apply in person. But they're offering great business lines of credit through the Key Bank platform, utilizing an actual Paydex profile. So very good point. American Express, they'll do anything for you because you've been with them forever. You have a great credit score, a great payment history. They'll do whatever they can to keep you as a client and make you happy and have you use their merchants, but they're not reporting to Dun & Bradstreet. So that's why they're just passing the buck saying, call them and figure out what's going on.
Thank you.
Thank you. Yeah, that was a great question. Last thing here. Thinking with the end in mind. It's not about where you are right now. It's where you're going to be in 1 year, 5 year, 10 year, right? Every one of you should have an estate plan at some point. If you don't have it right now, I'm not saying to go set it up tomorrow. Put it on the why wall, put it on the vision board, right? Next to the fancy cars and hotels and vacations. What does your entity structure look like long-term? And estate planning is, there's land trust, revocable trust, irrevocable trust. Depending on the state that you are in, avoiding probate, usually the easiest way is having a trust. Florida has an amazing Homestead Act where land trusts are more valuable than some other states. We really need to get into the weeds for your specific situation on what is most valuable and why. But all of you should have these areas. If you value and want more privacy and more protection, not all states are created equal when it comes to corporate law, right? Delaware and Wyoming tend to be the best from a privacy standpoint. I personally prefer Wyoming. If you send your dog across the border of Wyoming, they might come back with an LLC. It's that simple, that easy, very easy to maintain. So I actually have a holding company myself out of Wyoming. It doesn't do any business. It owns my other businesses. So if I own 10%, 20%, 50%, 100%, my Wyoming holding company owns that interest. The reason for that is if someone wanted to sue my consulting business, they wouldn't see my name and my address. They would see that it's owned by a Wyoming holding company that I don't have to put on the state website that I'm the owner. So that's all it is a privacy play. A lot of times people are like, are you avoiding tax? No, we got to pay taxes with where you generate income. Okay, we got to make sure we file with where you live. But if you want privacy, this is a great way to do it. If you don't care about that and it feels overkill, it's not something that you have to do either. What are the pros and cons and what is best for your situation? That's what we want to be able to make sure of. Now, if you're wholesaling contracts, if you're flipping land, right here, you're going to be taxed at these highest rates. That's where I want you to be able to take your deductions. But the comment earlier on not putting all your eggs in one basket, if we also are creating a passive income portfolio, let's separate out those liabilities. Sometimes I'll have people that are like, Tommy, I've got an online marketing business. Can I just use that same LLC for my real estate business? You can. There's nothing saying that you can't. But why would you commingle your liability and your funds like that? Separate out those liabilities, right? So depending,
accounts too, folks.
Yes. Tracking your expenses. We've the last couple of years, we have asked very targeted, specific questions to our clients. The number one thing that our clients do that saves them over $9,000 a year, our clients that track their expenses save $9,000 more than our clients that don't. And it's like, it seems so simple and it makes so much sense as well. You don't remember what you had for lunch last Tuesday. You're not going to remember if it was business related a month from now. So whether it's QuickBooks, an Excel spreadsheet, one designated credit card that has all of your business related expenses so you can print the statement out at the end of the year, hiring a bookkeeper, what can you truly commit to give yourself a profit and a loss and track your expenses? I promise you that's the best way to save thousands of dollars at the end of the year is simply having a system to track your expenses.
Yeah, getting optics over it for me is the most important thing.
Yes, I like that. That's great. And I tell people all the time, like, if you're not a big computer person, if you're not super don't go download QuickBooks and act like you're going to go log it every time, right? There's actually a really cool app. I like this app quite a bit. I'll throw it in here. It's called either Keeper or Keeper Tax. I think they just changed the name. What I love about Keeper is you can attach, it's like $120 for the whole year, which is deductible, of course, but you can tie together your credit cards, your bank accounts. It'll text you and say, hey, I noticed you went to lunch. Was that business related? You just reply yes or no, and it tracks it in the app for you and itemizes them out with different categories. So if you're a person that is not going to get into the weeds and track all your, that's a good solution for you as well.
Love it.
Well, we've been putting this together where I'm excited about the opportunity to be able to help the community as a whole. And hopefully I gave you some takeaways or some areas where you're like, am I maximizing tax wise? Am I truly set up to protect myself from an asset protection standpoint? We want to give as much value as we can. Our thought is we have services that obviously benefit you: entity structure, business credit, tax, estate. How can we earn your business to work together? And what we want to do is give everyone a free one-on-one consultation. Hopefully you took some notes and have some questions, but if you can speak with one of our advisors one-on-one and say, I'm brand new, or I've been in business for 10, 20 years, help me understand business credit. Help me understand how I can save more money from a tax standpoint. This call is for you. So whatever you want to get out of it, there isn't much that you need to do to prepare for it. Most of it you're already going to know. How many businesses do you have? Are you just getting started? What can we do to help you? So feel free, everyone. Zach, go ahead. Yep. You want to add to that?
Fantastic, Tommy. Now, I just want to really highlight that for anyone listening, because we get asked so many questions all the time as a marketing company when people are just starting out, or if they're 5 years in, about their structure, their setup, all of these things. And I think it comes back to one principle that I always keep in mind with business, Tommy, and that is you don't know what you don't know. So sometimes it's good to just go to an expert and be open and just ask lots of questions and find out, because I'm not an expert, and I don't know what I don't know. So to be able to ask those questions about structure, entity, how I'm doing my deals, are my deals active or passive, all of that stuff's really important. And I think what's really been highlighted to me today is that everyone's circumstances are different. The right structure, the right taxes, the right write-offs. Everything is different based upon your strategy, how you're doing business, but what you want your business to produce for you as well. So yeah, that was really awesome, Tommy. I'm just going to open it up for questions from anyone on the call.
Yeah, I'm happy. One other thing I'll just add to what you said as well. I love this. We had a client that had a really good year last year, and there's section 179 of the tax code. You probably see it on YouTube of like, buy a G-Wagon or a Tesla or a Range Rover. If it's over 6,000 pounds, then you can depreciate it. Last year it was 80%. Right now it's 60%. We're waiting on Congress to pass it back to 100%. If they'd hurry up, that'd be really nice for everyone, but it's still just waiting in the hands of the Senate and Congress to figure it out. So hopefully it's done before the end of the year. But we had a client that did really well, ended up purchasing 2 Teslas, rented them out on Turo. And because they wrote off the Teslas in full, they wrote off 80% of them. They're now cash flowing off of a Turo business that they never even anticipated to have. So it's like, who knows what's going to happen, when you're going to do it. For me, that doesn't interest me. I'd rather just keep buying more real estate, right? But for her, it was an amazing opportunity to diversify portfolio. And the more you know, and the more that you're aware of what your options are on what is and is not deductible, it's going to spark more ideas for more, hopefully, passive income. So hopefully that helps.
Fantastic. What a great share. Has
Yeah,
anybody
cool.
got any final questions for Tommy? Nope, all good. Okay, I see Kathy's already booked a call with you guys, so thank you. Thanks, Kathy. Tommy, any other final words of advice you want to leave to our listeners today?
I think the last thing that I'll just say is, I know that these are not the most exciting parts of your business, right? I'm fully aware, but when it comes to marketing spend, when it comes to dollars out and dollars in return, I love what you've put together and what the offer actually is, because it takes money to make money. And there's no secret that that's really what that strategy is. If you know what your profit and loss is, and if you obsess over what your tax bracket is going to be, then making these decisions that are going to impact your business are a lot more comfortable. And I say that because when you're spending $1, that person that spent $30,000 with you on ads, 6 months prior to that, that decision probably would have been more difficult. But then the fact that they took the action to get the planning in place and they said, I'm either going to pay 30 grand in taxes or I get to make a deductible expense right now that's going to benefit my next year. The rule of 72 is why banks are so successful. And everyone on this call has complained about interest rates at some point, I'm confident, myself included. Why don't we care as much about saving 10% in taxes? 10% lift in income is the same as a 10% decrease in tax. And if we can do both, that's where you really start to compound your wealth. So
I love
thank
that.
you for having me.
I love that, Tommy. Why don't we spend the same amount of energy saving 10% in taxes as what we do complaining about 10% interest? That's got to be the quote of the day, my friend. The quote of the day.
Love it. Love it.
Well,
Yeah, thank you
so
for having
much,
me.
Tommy and Zach, for organizing this. And Kathy's got one more question.
Yes, I thought of something when you said, Tommy, you're a realtor, a licensed real estate agent, or you're wholesaling, and you're wholesaling. I do both. So do you recommend or have a partner referral that works with people for insurance and the liability, like the umbrella type of insurances for your LLCs?
I tell people all the time, I pay for insurance. I'm not the expert. I would highly recommend talking to your insurance agent to see if you can bundle something together. I have like 4 different insurance companies because some of the states that I own property in don't have my primary insurance through Homesite and Progressive. So I am not the person to ask. I just pay for insurance. I don't like it like everyone else, but
Right.
I would recommend talking to your insurance agent or the insurance company that you have the best relationship with, because it's different for states and it's different for type of business. I've heard good things about like Proper for short-term rental, CBiz, Slice, but I would start with your insurance provider to give you kind of a basic understanding what is best for you and why from an insurance standpoint.
Okay, great. Thank you. That's great
Love that.
advice. I'll start there.
Thank you so much, Kathy, for the question. And thank you everyone for joining today. There is a link in the chat box that Zach put in there, and so did I, to book a call. So please feel free to grab that link. Have your free consultation with the amazing team at Prime. I certainly know a lot of people that have used them, and I know you guys do a lot for PaySmallBee in the Sub2 community as well. And I've certainly heard nothing but great things. So again, Tommy, Zach, thank you so much. And for anyone watching on the replay, give these guys a call. Thanks, everyone.
Thank you.